What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 22nd of 2021. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to dive into why I believe confidently that over the next coming weeks, we're going to see a major trend shift where altcoin dominance continues to bounce up, and generally where altcoins start to outpace Bitcoin as a whole. This is coming after the Bitcoin ETF or Bitcoin Futures ETF launch, which albeit is a great event, and I think is going to set Bitcoin in a position where it continues to break past its previous all-time highs and continue on into price discovery towards setting daily new all-time highs. I still think that we're going to see altcoins in the same exact position. Many of them, like Ethereum, already pressing up to those previous all-time highs, following suit with Bitcoin, and already starting to outpace Bitcoin during its big week. This might be a little bit of a buy the rumor, sell the news event, where a lot of the liquidity shift doesn't just go to Bitcoin, but especially goes to altcoins. Now, we're going to be diving into a lot of metrics that are going to make this case throughout the video and why I'm confident in that opinion. But two things I want to share with you guys real quick. We've got a sponsored review towards the end of the video. It's actually quite fitting one in this case. It's a project we talked about before, which is OpenOcean, which is a aggregator in this case that allows you to find price discovery across a variety of layer 1 protocols as well as the underlying dexes on these protocols. So stay tuned for that. You guys won't want to miss it. And I also want to give a big shout out to a good friend of mine in the crypto space. We recently did a video on his channel. This is Crypto Anxiety, otherwise known as Jay. And Jay is a really cool guy in this case. We had a great interview where we went back and forth where we were talking about the regulatory environment, kind of my philosophy on trading and investing, and also get to learn some as well from Jay and his perspective. We also badgered on about leverage trading and how bad it is, but you guys already know that by now. But we had a lot of interesting topics to talk about, so I'll leave a link down below in a pinned comment where you guys can check out the interview. And if you haven't already, subscribe to Jay's channel. He's a really, really cool guy. And again, I think some of the interviews he's done, some of the videos he's covered in the space, he's a really, really interesting guy to watch in this case if you're looking for market insights. Alrighty, so let's go ahead and dive into it, guys. You guys have been patient enough. Taking a look at altcoin dominance here, I don't want to beat a dead horse in this case. And to be completely fair, I don't know if it's a full enough confident trend to really see us revisit our general kind of target range of revisiting the previous all-time highs of altcoin dominance by the end of the year at around 64%. But I have to say here, guys, again, this is a great visual representation of not getting caught 2 steps behind. I know you guys have heard that term. If you're watching every single video, you've probably heard me mention that term too many times to count here over the past couple of days. But we can see here, taking a look at the chart, that this is a prime example of this, right? At the peak moment of fear where everyone's looking to rotate, when people are thinking, oh my God, we're gonna break the support line, or it's just too late for altcoins, right? Lo and behold, we bounce up not only exactly around this general support range, around 52.5%, but all the way up towards 54.15%. Right? Wiping back a couple days of losses here, all the way back here towards October 11th. Generally speaking, the altcoin market is on par with Bitcoin here in the sense of dominance. We just cut back 11 days of losses just like that in a matter of 3 trading days. Right at the peak point where everyone was probably wanting to FOMO into Bitcoin. Now, again, I don't want to sit here and say, oh, look, we got this right, this and that right, because really, we haven't seen a major full trend reversal yet. We got to see if this follow-through can continue. But what I want to talk about here today is how there may be many signs across the market that altcoin dominance could really substantiate a larger rally here going in the next coming months. And that if you really want to rotate from altcoins to Bitcoin, there's probably a better time to do it. And it's probably going to be when altcoin dominance gets back up to this resistance range, around 64%, right? We faced resistance at the second highest range here back from May of 2018. And I think that we're on par to come back up to the January 2018 highs. And it doesn't even have to be as crazy and euphoric as before because there's a lot more players in this space, a lot more established players. So let's go ahead and take a look at some of those metrics, right? First one I want to take a look at is total DeFi dominance. This is taking the overall measurement of all tokens related to the DeFi ecosystem, not just Ethereum, but the broader crypto space, projects related to DeFi, right? So this even includes some larger plays like Terra, some other DEX plays in this case on major protocols like Solana. You're really getting a big basket of assets here, right? Well, what's interesting is that we've still been trending through this general channel for total DeFi dominance. And you can find this on TradingView by typing total DeFi.d. And you can see here that we generally have been having this ride where we come up here, we had the point of resistance, support, right? And right now, we've been generally still trending here on this support line. So whereas a lot of people again are panicking, right? This is generally not the time to be rotating out of DeFi assets, at least according to history in this case. Now, if we start to substantially break below here, below maybe 5%, yeah, it might be a time to run for the hills in this case. It might be a sign that the trend is breaking away. But we're generally around support here, albeit it's been a rocky road here. So the idea here is that we could start to come up and set new highs and dominance for DeFi, right? DeFi is one of the most fundamental sectors in the crypto space. It's got real adoption, real traction, real excitement behind it. And I think it's very justifiable that whether in this case, we're not making the case that the DeFi sector is going to, how do I put this? The existing plays in this case are all going to double against Bitcoin or anything like that. What I really want to generally provide as a thesis here is that if you pick the right players, you'll not only do very well, and just generally being exposed, you'll probably outpace Bitcoin. But along with that as well, with a variety of new players coming to space, right, we can easily get up towards this 9% dominance mark here, right? So again, I think that there's a very good chance here that in the coming months, as we go into Q1, right, we could start to see altcoin dominance continue to grow. It might even happen quicker in this case. We like to set conservative time estimates. Like, so somewhere in this band, we're expecting, coming anywhere from around 8.5 to 9% here for market dominance. And that's just according to the channel we're working with. We're on the lower band here, right? And we can see here that generally it's been about 15 to 19 weeks when these uptrends kick off. Setting a 20 bar in this case, or 20-week trend, is probably very conservative here, right? Now let's go ahead and take a look at total DeFi in the sense of market cap, right? What could this look like? Well, long term, we're expecting by the end of the cycle, altcoins within the DeFi space to have a $1.5 trillion market cap. That's basically speaking towards a target range goal of around 15% market dominance later down the line. So we're expecting eventual breakout of this channel to the upside, but that's much later in the cycle. Right now we're about $150 billion. So we're talking about a 10x opportunity in our opinion in dollar terms. So we think, generally speaking, that again, going into like January, February, that Q1 period, we could see a really big breakout here in altcoin dominance. And this is considering that Bitcoin is rising in this case, right? So for altcoins in this case to not only rise up simultaneously, but also be gaining market dominance, it easily sets us in the pace here where we could see a major breakout here where DeFi altcoins really start to steal the stage. And again, I know people are like going from 150 to, 500, $600 billion, Nick, you're crazy, right? Well, we came down here from around just back here in December, right? Back here, and also, and this is something that we actually talked about with Jay in the interview, back in October and November, we were averaging heavy into plays like Uni and a lot of other DeFi plays. And what do you know? We came up here from 15 billion towards around right under 150 billion, 10x in this case in valuation. We're not asking for a 10x here in the next coming months. We're asking for a 10x going over into late 2022 or early 2023. For now, we're just asking for half of that, where a lot of those gains will be given up. It'll channel for a while, roughly speaking, and then we'll have possibly a third wave in altcoins towards the end of the cycle. But I really think in this case, there's a good chance here that DeFi could start to steal the stage once more in an environment where Bitcoin is generally growing. So let's take a look at another sector here, not just DeFi. Let's take a look here at a major protocol custom index that I created. So this is taking the market dominance of cryptocurrencies like Ethereum, Cardano, BNB, Solana, and also including some of the smaller plays like Avalanche. Now, if you add, for example, like Cosmos or a couple others, you're going to get slight variations. But really, if you had the big dogs, Ethereum, Cardano, BNB, Solana, those are kind of the four large players here at the moment when it comes to a competing layer one protocols or just different layer one protocols in the space. What you get is a really interesting measure where these players generally right now own a little bit over a quarter of the market in the sense of market share, right? And as we've seen here, we've been able to hold on a general line of support from all the way back here in May of 2021, setting in higher lows, owning more market share of the market. And even after a pullback from back here on 30%, down towards around a little above 25%, we're now starting to see higher lows continuing on that support line, pressing up against the resistance to that downtrend line. right? So again, as we talked about when we were taking a look at the Bitcoin charts in this case for a lot of these assets, a lot of them are really nice discounts, 40, 50, 60%. That's generally what smart money looks for. They're looking for areas to rotate their capital at a discount so that they can obviously see price appreciation going forward. And it's going to be a matter of being a step ahead in this case, right? Or if you found yourself one step behind, being in altcoins for the past few months where Bitcoin obviously garnered some market dominance, you at least don't want to find yourself 2 steps behind, right? So that's the key principle here. Now, we'll look through a couple other charts here. I want to take a look at ETHUSD. We're expecting here that Ethereum is going to come up easily towards around $7,500 to $8,000. This is something that we actually wrote about in the newsletter and talked about in this case in regards to our expectations. So you guys can get these kind of market insights if you guys join the Dash report, where we generally talk about the kind of state of the market. But it's not just in dollar terms, all right? We do believe here in this case that as Bitcoin is rising up, that's going to help sustain a lot of the dollar gains for Ethereum, but also that Ethereum might very well have an opportunity to press up higher towards the resistance band in this case, which means that it can make a solid, in this case, from this point on, we could see Ethereum outpace Bitcoin by about 25, 30%. But we may even clear through and start to get out of this channel and start to make it support, all right, before we really kick off and have a seismic rally for Ethereum. But long term, we're still expecting, if you're just like trading the broader cycle, that Ethereum is going to be your better bet than Bitcoin. Okay? We're not at Ethereum's peak yet. So last but not least as well, taking a look at Uni as well. You guys know Uni is one of our big DeFi plays. I think that, again, we've been seeing this pattern on the dollar chart between not only Uni, but a lot of other crypto plays, even Ethereum. We've been having these higher lows, consistent resistance range. We're really not that far from a potential pop-off here, guys. Keep patient on it. Keep focused. Don't lose sight. Don't get too caught up in all the euphoria around Bitcoin. I can promise you guys that there's a good chance here that we could start to see a trend reversal in altcoins. All right, we've been setting this conviction. I posted about it on Twitter. We talked about it in a recent thread. Generally speaking, altcoin dominance here has built a nice new range of support on a historic line of resistance. And I don't think in this cycle we're going to see that broken until we get our euphoric breakout in the late stages of the cycle. No matter if that happens earlier or later like we've called for, we're only going to get that breakdown once it's bear market time, right? We're going to continue to have strength like we did last time and only see true weakness when the euphoria or the punch bowl spilled over in this case. That's an old saying in markets, right? Keep filling in the punch bowl, everyone's having a good time, and then eventually the punch bowl spills over. The alcohol dries up in this case, and everyone goes home. It's the craziness of markets, guys. But anyways, enough joking about that. Let's go ahead and actually dive into a really relevant sponsor here today, which is going to be diving into our review of OpenOcean. Alrighty, everyone. So in today's sponsored review, we're going to be taking a look at a protocol we've covered here on the channel before, which is no other than OpenOcean, or OpenOcean.finance. So for those of you who may not know what OpenOcean is all about, it's a really incredible protocol that does something incredibly important. Whether you're trading in the Solana ecosystem, Binance Smart Chain, Avalanche, any ecosystem you can think about, and eventually Ethereum, in this case, you want to make sure that you get the best market rates. You want to make sure in this case that with the liquidity you've got when you're trading from one asset to another, you're not incurring mass levels of slippage and you're not getting a bad rate from trading from one asset to another. And this is a problem sometimes that you can run into when you're just trading on one single DEX. Well, OpenOcean, much like other players like 1inch, etc., are aiming to solve this. But the really cool thing about OpenOcean is it serves as an entire interface, not only to interact with one chain, but multiple ecosystems, and showcases all the things you'd want in regards to a decentralized exchange experience or an aggregator experience. So we're going to be diving into it today, doing a live trade. If you guys have any questions or want to learn more about it, you always can check out the docs section on their website. They have all great types of resources there to learn about OpenOcean. But this is a really great time to talk about OpenOcean because they just recently launched the OpenOcean Atlantic version. So this is the latest version of OpenOcean that not only continuously improves upon some of the user experience elements within the overall website and protocol, But the really great news is the underlying functionality behind Atlantic that's going to make it the best aggregator in this case, if not one of the best, to be able to utilize in order to get the best market rates. Right? So what do I mean by this? Well, this new algorithm in this case that's optimizing between chains on your trades is one of the best in the industry according to the recent studies. So they did over 4,587 test swaps, and they found that there was 60% better execution than any other players in the market. Right? So there are some occurrences in this case where you may not get the absolute best rate, but here within their testing, which they did a really pretty broad range of back testing here, 60% of the time you're getting the best market rate. Right? So that's a really incredible performance in this case when aggregating on chains like Binance Smart Chain, right? This is one of the major players here outside of the Ethereum ecosystem due to PancakeSwap and a couple other players. We're seeing tokens launch all the time and a lot of trading opportunities in the market, right? So anyways, just wanted to hit on this. I think this is really, really exciting here. And I want to go ahead and actually dive straight into the protocol. You guys can utilize it today. It's not a white paper. They've got a real platform here in this case, and they're really focused on the utility that the platform offers. So when you dive into start trading here in this case, you've got generally two major viewpoints. You've got, in this case, Classic, and you've got Pro. Right? Now, these two viewpoints are going to give you slightly different experiences or ranges of details, but they still allow you to do the same thing, which is trade in this case, right? That's what we're all here to do. So let's go ahead and dive into both views in this case, how to navigate. So you can see here that I'm actually today not going to be making, like we usually do on the channel, an Ethereum trade. We're going to be making a trade with AVAX in this case through the Avalanche network. So I've got my MetaMask wallet connected here in the top right. I'm on the Avalanche network. All right, we'll go ahead. I'll just walk through it here real quick by connecting wallet, click MetaMask, and lo and behold, I'm connected to my wallet here. So I'm already in here, and I can start to trade my Avalanche tokens from a familiar interface, MetaMask, inside the OpenOcean protocol. Okay, so first off here, you've got your general charting here, which is really nice. You can go through various time frames. We can dive into the 5-minute, 15-minute, 1 hour, the daily chart in this case, and really start to get some detailed price action here on the assets that we're trading. You can see that it generally lines up here because DEX is generally going to follow the market rates. Arbitrages will help to keep things aligned, right? But the other thing as well here as well that's important to understand about OpenOcean is they're really trying to bring deep liquidity in this case, right? So we can dive into all the different kinds of routes that we can take. It's generally known as routing, where we can find out the best way to break up our trade. We don't have to just go through one protocol. We can interact in a single transaction with multiple chains to get the best liquidity possible and to reduce slippage. Even if it means we have to pay a little bit more of a network fee. What's nice is, though, in this case, whether it's Binance Smart Chain or Avalanche, the network fees are generally much lower than Ethereum. So really, DEX aggregation is actually much, much more practical in this case. And in the case of Ethereum, you usually have to do much larger trades to justify the gas increase in this case for doing larger transactions. So let's go ahead. I've rambled on enough. Let's dive into it. So let's say, for example, I want to do a trade of 5 Avalanche in this case. I've got about 9.97 in my wallet here, but I'm going to go ahead, give it some time here to find the best prices. Within a couple seconds, it's going to give us the best market rate here. We're going to get 324 USDT. We're going to have a slippage of this case around 0.92%. Right? And we can see here that this is routing through 40% into Lydia in this case. All right, so we're going to take our wrapped Avalanche and trade it into Lydia. And the other 60% is going to go in through another trade route here, right? So we can see here the different various markets, and OpenOcean has given us the best rate. Whereas if we just traded by the individual DEXs in this case, we would start to see that the spread here, or the slippage, gets worse and worse and worse and worse if we were to just simply go through these exchanges, right? So it's really exciting stuff here that we can get the best market rate. We can see our estimated fee here for the trade, and generally the cost of one Avalanche in this case, and in this case, how much Avalanche we could get per USDT. All right, all the major data here. Now, this is the classic version. This is more for a simplified trading experience. But if you want to take it to the next level here and get a little bit more detailed with things, you guys can actually take it here towards the Pro version. Now you can see between the classic version, the Pro version has a couple extra things in it. It prioritizes, in this case, visualizing the different types of rates in this case for trading Avalanche. We can see here on the left-hand side, we could dive in to a variety of L2 and layer 1 protocols in the crypto space. And outside of this, well, not only do we have our normal routing, our transaction history, and also our major trading terminal here where we're actually going to be plugging in our trade and getting the market rate, but also we can dive into what the rate is on CeFi markets, what the spread is in this case, right? All kinds of really interesting market metrics. But let's not go ahead and push off any longer. Let's go ahead and plug in a trade here in this case. Let's go ahead and do the original one we talked about. We're going to be trading here in this case about 5 Avalanche for USDT, right? Got about 1% spread here. And it's again giving us the best market rate here that's available. So let's go ahead and click swap now. And what this should initiate here is confirm swap. Again, it's just going to make sure we're confirming things. Our price tolerance is up to 1% here. We're going to confirm the swap. It's going to prompt MetaMask here to confirm the transaction. We can see our gas fee on the Avalanche network is going to be a little under 0.02. I'm going to click confirm. Transaction's been submitted. We can go ahead and view it on Avalanche to see how the transaction's progressing. So it's going to take a minute for notes to pick it up, but it actually looks like, well, I've got the notification here that it has been confirmed. So let's go ahead and we'll go back here to Avalanche. And if we click on Max here in this case, let's see, actually we'll refresh the page here to see if our new balance is reflecting. There we go. Yeah, so I just refreshed it here. We've got 4.95 Avalanche. We can dive into our MetaMask. It'll show us the same amount, but the fact that the protocol is displaying it here means it's working. So we actually swapped through from Avalanche to Tether, just like that on Avalanche, for a very minute fee. And we did it through the OpenOcean protocol here, which really simplifies the experience and makes sure that we're getting the best market rate possible. I can't express how important this is, guys. Whether in this case you are a smaller trader, a mid-sized trader, or you're like an absolute whale in the space, the larger you grow in this case in your portfolio over time, and that's relevant for people who are doing small investing as well, you need to be more and more cautious of slippage. Network fees in this case, especially in very scalable layer 1 protocols like Binance Smart Chain or layer 2 solutions like Polygon or new layer 1s like Avalanche, network fees really aren't that big of a concern. Your biggest concern is going to be making sure that there's liquidity in this case, deep liquidity, to be able to give you a justifiable rate. The really cool thing about Avalanche as a protocol, or excuse me, OpenOcean as a protocol, is a lot of the key elements and traits that it has. It's been backed by Binance Ventures, a lot of major players. They've done over $3 billion in volume as a protocol. And overall, I'm really excited to see the recent updates here with the Atlantic update to OpenOcean. I think that this is a major milestone here and a continued step of progress for the protocol in order to make sure in this case that you're getting the best market rates, because it's a constant game of competition and research in this case to build the best market rates when you're interacting with all these various protocols. And I gotta hand it to them, having to integrate an account for all these different networks, not to mention the range of DEXs on them and the tokens underlying the pairs that people want to trade. They've made a very, very long stride in this case towards building that experience. So I want to give them hats off on that. I think it's been a really, really good ride seeing how OpenOcean has grown as a protocol since we first talked about it. But that being said, if you guys are interested to learn more about OpenOcean, you want to give it a try for yourself, feel free to check out the link down below in the description and give it a try for yourself in this case. I've used OpenOcean in this case before to make trades. It's a really solid protocol. And again, I can vouch in this case that it's a great way to get the best market rates here when you're utilizing other various platforms and protocols to trade your favorite cryptos to one another. All right, so that's going to be it for today's video, guys. Thank you all so much for watching. If you like this video, drop a like and let me know what your thoughts are in regards to the topics that we talked about today. There's so much in this case going on in crypto, but again, I think the focus here is going to have to be in the altcoin space over the next coming weeks and months. All right, guys, thanks so much for tuning in as always and letting me ramble, and I'll see you guys in the next video. Take care, everyone.